International Relations and Cooperation Minister Ronald Lamola says since the United States is South Africa's third largest trading partner, his department will continue to engage to conclude a deal on tariffs. Lamola says South Africa's exports are crucial inputs that support the industrial base of the U.S. This after U.S. President Donald Trump imposed reciprocal tariffs on a number of countries, including South Africa, who will now face a 30% surcharge on all exports to the U.S. The tariffs will take effect in less than a week should there be no deal between South Africa and the U.S.
The 30% unilateral tariffs on foreign imports apply to various U.S. trading partners, which will be implemented from 1 minute past 12 a.m. on the 8th of August 2025. The executive order published by the United States clarifies that goods loaded onto a vessel at the port of loading and in transit on the final mode of transit before 1 minute past 12 a.m. Eastern Daylight Time on the 8th of August 2025 and entered for consumption or withdrawn from warehouse for consumption before 1 minute past 12 a.m. Eastern Daylight Time on October the 5th, 2025 shall not be subject to such additional duty and shall instead remain subject to the 10% tariffs. The U.S. is South Africa's third biggest trading partner, with the European Union and China being the first and second largest trading partners. The U.S. accounts for 7.5% of our global exports. Thus, we will continue to engage the U.S. with a view to conclude a deal that advances the interests of both countries. South Africa seeks to conclude deals that promote value addition and industrialization, rather than extractive relations that deprive the country of the ability to beneficiate our mineral wealth by mimicking extractive colonial-era trade relations. South Africa's minimal 0.25% share of total U.S. imports makes the 30% tariffs on our country are inscrutable, especially when these same tariffs have been applied indiscriminately to all U.S. trading partners globally. Moreover, South Africa poses no trade threat to the U.S. economy nor its national security. The calculation of U.S.-South Africa trade deficit ignores the substantial U.S. trade surplus in services, as well as the complementary nature of the bilateral trade and investment relations between the two countries. South African exports do not compete with U.S. producers and do not pose a threat to U.S. industry. On the contrary, our exports are crucial inputs that support America's own industrial base. Our agricultural exports are even counter-seasonal, meaning they fill gaps in the U.S. markets, not replace domestic products.